Hello, everybody. Welcome to another edition of This Week in Crypto. I'm Brian, your host. Dino will be back with us next week. Maxim should be joining at some point. But for now, I will be guiding you through what was a very volatile week in crypto. We definitely had our ups and downs. Lots to go over here, and we'll definitely be taking plenty of questions. So feel free in our YouTube here to give us some questions so we can address them at the end and go over some of the hot assets that you'd like us to discuss. So beginning with our screener here, as we like to kick things off with, we had mostly a down week for altcoins and Bitcoin, of course, being at around negative 5.3%. Ethereum break even. Obviously, we had XRP continue to drop a little bit, and a few other large caps that actually had notable weeks, like Chainlink that burst open for a 22% gain. We also had Cosmos Atom here at 18. Then, of course, we had Hedge Trade, which was the big winner within the top 100 assets this week with a 74% gain. We had IOST, BTCB, VGX, and Band also with decent weeks as well. So overall, the trend was a kind of a negative week. We had a run at close to 40,000 again for Bitcoin just about 2 days ago before we had a pretty steep and quick decline. It wasn't a severe one like the one we saw on Sunday last week, which saw the price drop all the way from 39.8K to 30.8K. But it was kind of a fake out, and it's clear that volatility is a trend right now. This is probably the most up and down I've seen Bitcoin since last March, and kind of the recovery that followed that after the Black Thursday crash. Volatility, of course, doesn't mean that it's all downside. It just means that the amount of up and down direction is more severe than we have seen in quite a while. So if you're a day trader or kind of a short to midterm trader in general, this can actually be good for you if you enjoy swing trading, finding ways to get in a quick, 5% buy here, and then a quick shave off of some of your profits just a few hours later. So I'm seeing that we're kind of in a zone where there's a lot of indecisiveness. There's social volume going haywire right now for a lot of different assets as people try to figure out, whether one big move is the beginning of another 2x or 3x. Right now, there's a lot of discussion about Chainlink, which is already a popular coin, even without this volatility. But with this 22% gain and it being the largest gainer within the top 50 or so, there are a lot of people speculating that it's going to be the next big coin of 2021, at least for the first quarter of it. And we'll definitely be going over Chainlink today and trying to figure out together some fundamentals that are looking good and maybe looking as a bit of a caution flag as well. So I'm going to start. The first chart that we're going to look at is going to be our Bitcoin holder distribution. This is quickly becoming one of my personal favorites to really check out what the top holders of any asset are thinking about at a given time. Like we have been going over on Twitter quite a bit for the last couple of weeks, we've had a pretty enormous gain in 1,000 plus coin addresses, rocketing from about 2231 all the way to where it is now at 2430. That's around a 6-7% gain, and it's not really showing any signs of slowing down yet. Yes, we did have a slight tick down of just 2 less addresses over the last day, which correlated with this drop from 39.2K at close to about 38.3 now, or at least where it was at the end of close yesterday. Now it's at about 37,000. But I'm still very interested to see where this is going to go, because if I disable this and this, and we just look at the 1,000 plus coins versus the addresses with 100 to 1,000, or I'm sorry, 10 to 1,000 coins, Obviously, it's a pretty inverse pattern here, and this doesn't always happen. It's been kind of a case of whales continuing to grow while the mid-tier guys, the guys with 10 Bitcoin to 1,000, really just taking tons and tons of profit, especially once we hit the 29,000 mark. That's when those mid-tier guys decided, you know what, this is good enough for me, or they think, you know, this is the spot where things are going to turn around. And obviously it didn't. It just continued to grow. We got all the way up to about 41,000 before it finally topped out here. And then we're kind of in that hover mode between 35 to 41 ever since. And we almost crossed 40K again. It had a large part to do with the fact that these whale addresses continue to grow. Um, until that changes, until we see this yellow line dropping back down, I have a really hard time believing that Bitcoin's going to see a true correction. When it does, it's going to be swift, and it might be when these mid-tier holders begin to grow again and decide that it's time to accumulate and the bottom is in, right? And then the whales will see that and do the opposite. So these two, at least since Christmas, are really inverse to one another, which is super interesting to me and something to look out for. Over on the Ethereum side, it's looking very, very similar. I'm going to just isolate the 100 to 10,000 addresses here, which acts as the mid tier, just as we saw with Bitcoin. And then the as my, looks like my Explorer, there we go. We have the 10,000 to infinity one up here in gold, and it's basically the exact same. We're just today, in the last 24 hours, seeing a little bit of a drop off between 1223 and 1221. So that exact same number of just two whales that are no longer with us after the day before. Um, it's basically just going to be a big wait and see here to see if the gold line finally starts to descend again. Unlike Bitcoin, the mid tiers haven't even began to show a sign of rising yet. They're continuing to take profit up at this level above 1,000. Right now, I think it just ticked below 1,200 as we're seeing kind of a very mild correction this morning where I am, afternoon, evening where some of you are. So I'm going to be watching out for both, obviously Bitcoin especially, because it's going to dictate how the rest of the markets look. So if you really see like a gain in volume, which we'll go over today, as prices drop, that's going to be a sign that the crowd is actually interested in that price downturn. And prices tend to go with the direction of volumes gaining. So if volume is dropping off as prices decline, that's a good sign that it might be a local bottom and time to get in. So that's another graph we'll go over. Before we do so, I'll also show Litecoin because it's been of interest over the last couple of months, much more than it has been for a long time. You know, all through, I'd say up until mid-November, Litecoin was almost looked at as a joke, and the little brother of Bitcoin that doesn't really move the needle too much. And for some, you may still feel that way, but obviously with Litecoin, around mid-December, it really started to see some price explosion, going from around the low mid 70s all the way up to a high of about 177, even 180. I saw on a few exchanges, and that's going to be interesting to watch. I have the colors reversed here, but basically pink is the mid tiers, and tan here are the whales, and the tan is looking like it's continuing to decline along with pink. So this one's a little more obvious to me. It doesn't seem to be of much interest during this big Bitcoin rally over the last 2-3 weeks at least. And I don't see a great sign of a big price recovery now that it's back under 150 after hitting 180 or so. Until that changes, Litecoin may be in the process of going back to that ignored little brother of Bitcoin that we remembered from, you know, for the majority of 2020. Okay, I'm going to jump into daily active addresses. I'm also going to show volume as promised here. I'll actually just do volume first. So here is volume. I'm going to do a bit of a trend line as well. So we'll do 7, could put that on 1 day. And then we'll also do a 50-day. So when we set up a lot of these charts, guys, I like to show off what it looks like on a short-term basis moving average and long-term basis moving average. 7 and 50 to me is a pretty good number, and I've even seen some posts from some of our respected partners like CryptoBurb who use those same numbers. So don't forget, any metric that you put up here, you can click on the gear and you'll see this indicator with moving averages as an option. I'm also going to make the chart an area so we can see things a little bit better. The tan is actually following pretty close, so I'm actually going to take that off for now and just look at the pink line. But overall, this 50-day moving average is looking like it's on a constant increase, which is great to see. Obviously, a lot of that is contributed to what we've seen over the past month. Really right about here is where we started a really spike in volume for Bitcoin. I'll actually zoom out to the last year, and we can see that it is a pretty constant rise ever since July or so. We've just been getting enormous volume. This, of course, here in early January, this is an all-time high in volume. It's the most volume we've gotten in the course of Bitcoin's history, with the explosion to above 30,000 and well beyond it. If I zoom in, we can really see it isolated here around the end of January 10th, and kind of saw a mild drop off. So this is what I'm talking about. When you see this kind of price drop followed by a volume drop, it means that the crowd is disinterested in that price move. If we see something like this back on December 31st, right before the new year, that means that people are interested in this climb in price, and it means that the climb can continue. Even when there's a slight dip like that, overall, this trend is going up. Therefore, when you see this kind of dip here, it's a sign that you can buy, because the volume trend is still going more with the upswing than the downswing here. And that's something that I really try to look for, and have learned a lot from our technical analysis guys out there. Now over to daily active addresses. So these orange bars here are each day of unique amount of addresses that are interacting on Bitcoin's network. The pink line is the 50-day average. I'm actually going to make this an area so it's a little easier to say, much better, see, much better. The pink line is the 50-day moving average. The tan line here is the 7-day. We have, I'll actually scrape off the last day because it's an incomplete day. Whoops. Let's try that again. There we go. So each of these days is 1 day of active addresses, as I said, and the numbers are constantly climbing right now. The last 6 months looks great. If I go down to a year, it's even better. Let's even look at 2 years. And what do you know? It's basically a constant climb for Bitcoin's daily active addresses when you zoom out like this. And that's a fantastic sign that this kind of price move is justified and not just a flash in the pan, right? If we were to see DAA suddenly drop back down here, and you got to ignore this one because this is just an incomplete day. That's basically, these candles are, each of these days is showing like a little bit of like a day and a half to 2 days when it's this zoomed out. That's why you're seeing this latest bar being where it is. But if I zoom out once again like that, there we go. So we can ignore that. The pink line here obviously is continuing to climb, exactly what we want to see. Unless we see a drop off like this while the price stays, I don't see a huge drop off to like suddenly below 30K. Obviously not investment advice. Crazy things can happen. Whales can decide to take matters into their own hands. But all things considered, from an on-chain perspective, this is what you want to see in a bull market. And I'm not seeing any reason to panic sell right now, even with us down below 37,000 temporarily. I expect that to rebound at some point, but you know, you can't guarantee that. We could drop below 35, could drop below 33. As long as daily active addresses stay high though, I wouldn't have a lot of fear here. So it's really important with your Sandbase Pro APIs to kind of just keep a close eye on this metric and make sure that it's staying high and not dropping below, these levels here. Okie dokie. So we've got holders distribution, volume, daily active addresses. I also want to show what the trend is looking like for buy calls and sell calls. So I'm going to put in buy or bot or buying. And what it's going to do is compile the social volume for those combined words over time. Now, this can be a little skewed because there's more calls in both directions. The blue lines here are basically the overall amount of calls with those 3 words in it. You can even go down here and see them separated between platform. But what I like to do is enable social dominance, because this is going to show the percentage of calls that fell with these 3 words compared to all the words that are being discussed. So obviously with all-time highs being made over the last month, there's more volume overall, and the orange line here is giving us a distinct look at what the percentages versus all of the increased amount of discussion happening is. As we can see, the most social dominance, make it a little bigger here, most social dominance occurred just a few days ago. We had about 15.6% at one point in terms of buy calls, and it happened right when we saw this big dip. Many of you may have seen the article that was released by our staff just yesterday about how buying the dip calls, when they're too prevalent, it's actually a sign that the crowd will probably be wrong. When a narrative is so common and people are screaming that it's time to buy, the opposite usually comes true, because whales are seeing the volume going in that direction and they view it as an opportunity to take profit. Now, conversely, when there's a big dip and everyone's saying it's time to sell, it's time to get out, that's of course the time to buy, because whales will see that as the opportunity to buy at those low prices and know that they won't see much resistance. So as of now, we just saw a big buy signal coming right here from the crowd, who think that this dip right here down to 34, 33 was the dip. Once we rallied, of course, those buy signals kind of went away. Now that it's dropping again, just a slight uptick, you'll want to see that this orange line stays low. That's the hope here, because it means that the crowd this time around is not quite as interested, or they don't believe in the dip coming back up like they did just a few days ago on the 10th. So I love looking at this one. What we can even do, I'll take social dominance off and we'll compare and go sell or sold or selling, and we can, on the same axis, see exactly how they compare to each other. Now it's a little bit tough to see, so I'm going to make the time frame a little closer. We'll even go last week. We'll do last month. So just recently, we had more people calling for, not more because they're on their own axis, but comparatively over time, with the amount of buys and sells that are happening, with buys having about a little over twice as many calls as sells, the latest candles coming in actually showed that sells were the predominant discussion here. And sure enough, the crowd has looked temporarily right. But in most cases with the crowd, even if they have one of their calls coming to fruition, it's usually temporary. Just like we had the highest amount of sells compared to buys happen at this dip, the opposite actually came true. So we saw the social dominance being really high for buy here, but actually when you look at sell next to it, there were more sells going on comparatively at this point than just about any other time, other than maybe here and here. But either way, obviously this was the most polarizing time that we've had in the last month, and sell was the predominant kind of narrative that the crowd was pushing. Sure enough, they were very wrong. A lot of people are kicking themselves for selling at the low 30,000s. And now we're going to be watching very carefully to see if a similar kind of pattern breaks out there. And speaking of crowd sentiment, we'll take a look at the Twitter weighted social volume. We'll actually start here because this is one I love to look at as well. This is the amount of positive posts related to Bitcoin over time. And then this is the negative amount of posts in red, right? Very intuitive. And essentially, we had a huge wave of positive commentary as we got close to late December, right at December 31st, actually January 1st, give or take one or two of those days. We then had a huge drop off as the prices got to above 40,000 for the first time. There was a bit of disbelief right before then. And then obviously when it dropped down to the low 30,000s, Bitcoin's positive commentary dropped off a lot. Now there's a little bit of a delay in this metric because it takes some time to compile everything and put it up on this platform. But right now, I would presume that Bitcoin commentary on the positive end is remaining kind of low because of what we just saw with the buy and sell calls and the way those patterns are shaking out. Negative commentary is just slightly going down, but it's closing the gap overall. I mean, the positive commentary here is dropping much more so than the negative right now. And that's showing that we're probably getting closer to neutral, which we'll check just by scrolling down in just a moment. But weighted social volume is going to take a look at what the positive and negative ratio is in comments and also multiply that by the amount of volume that's happening right now. So I know we were euphoric here, and I'm going to look for the first time along with you guys to see how it's looked. Yeah, so exactly as expected, we were at a very high positive rate here 2 weeks ago. This was one of the highest positive rates that we've seen, and it's a sure sign in almost every case that a local top is near. It took about a week to a week and a half later, but we eventually hit that top, and then the sentiment for Bitcoin dropped off a cliff, and we're actually getting close to neutral again after being at that euphoric place to close out December and the end of 2020. And this is a good thing. Generally speaking, we want the weighted sentiment of the Bitcoin community to be low, not high. If it's high, it means that the crowd is expecting prices to continue rising. And like we just mentioned, the opposite tends to come true. We had local tops when it was here, local tops when it was here. And then this one happened about a good month before the local top happened. We had a few repeats that were a little lower here before the big price decline in the second half of 2019. But mostly in every case that you have these big weighted sentiment spikes, there's eventually going to be a very big correction like we saw last Sunday, eventually going down to 30,800 or so. So keep a very close eye with your Sandbase Pro accounts on this graphs on santiment.net/social page. I think it's extremely useful to get a glimpse of what is happening with the crowd, how they're feeling about Bitcoin at any given moment. You can even look at other trading platforms here. And it's a good complement to SANR, which we're still sort of refining, but many of you in our community are checking out as kind of a trading contest that rewards for making good calls and also allows you to check out what some other people think about the markets and where they're headed. This is a great tandem to that gives you a nice objective look at how the community is looking on a non-biased perspective. You know, you'll see a lot of commentary on Twitter and these other platforms that's just constantly positive because they think that's what's going to get the likes and the followers and everything, and to an extent they're right. But you're not going to get the most objective analysis just by looking at comments until you look at everything in congregation, because this is taking the mean of Twitter over time, regardless of that positive bias, and looking at when it's especially positive or especially negative, if that makes sense. Okay, we're about 25 minutes after. Is Max on the call by any chance? Yes, he is. If you are there, Max, I would love to hand the floor off to you so I can take a few sips of water and see what your perspective is for 5 to 15 minutes if you are prepared to show off a few things.
I'm here, but somehow something happened in between. I'm not in the best now condition to share something private. So
yeah, that's no problem.
Well, just shortly, and we will publish actually one pro report today, somewhere late, and showing usage of sentiment data, especially crowd sentiment data, like real social data. And from what we've observed so far, combined social data combined with our redistribution metrics like point mean age, we seems to be missing one last push to finish the redistribution, but there is yeah. So prepare to exit Bitcoin positions. And there is some healthy move in specific set of altcoins, like exchange-related Uniswap, SUSHI and 1inch. I'm talking mostly ERC20. Yeah, and another topic, of course, we observe is dollar index range. So some people claim, or there are talks sharing that dollar fell too low, so it should rebound. And yeah, eventually it should. Eventually it should. So it will be, I think, the biggest topic for 2021. Rebound of the timing is hard. Yeah, timing is hard. But it will be a big topic. And once it will start rebounding, yes, it will be definitely impacting Bitcoin as the biggest currency. But altcoins should move independently. It will be mostly like flow of value between different altcoin segments. So just in a short summary, some of it we will cover in our pro report, but it will be coverage for Bitcoin mostly. Yeah, and sorry, yeah, I could hear some, had to do something.
No, perfect, Max. Appreciate it. And as Maxim is saying here, we'll have a pro report up in the next day or two, so you guys can check that out and see what we've kind of encapsulated as the hottest topics in over the past week. And it's going to be a big one because obviously with volatility so high, many standouts and things to get to that we can't cover on this call. But obviously we'll take this last half hour to get through as much as we can here. And Max, feel free to jump back in if you see something you want to talk about.
Yeah. Okay.
All right, so now we'll get into our Sandsheets models a bit. For those of you who know, we have, for those of you who don't know, I should say, we have Sandsheets models that allow you to get a snapshot of what some key metrics are looking like for many projects at the ease of a refresh. And what we're looking at right now is the MVRV Opportunity and Danger Zone table, which gives us an idea of how good projects are looking based on the amount of trading success. Oh, sorry, I think my phone disabled my mic, but I'm back. Yeah, it's basically taking a snapshot of historically how bearish or bullish the trading success is for every given project by looking at their 1 day, 7 day, 30 day, 90 day, 6 month, and 1 year trading returns. It's not just the returns of the asset itself, it's how well traders are doing in that particular asset, as in ensuring that they're longing when prices are going up, shorting when prices are going down, all of the FOMO and FUD that's included with the fluctuations in that project's price. And you put it all together and you see whether their success is overwhelmingly positive, which is going to give an overbought signal, meaning that if you came into the project now, you would essentially be buying at huge risk when a lot of people already have massive gains. If it's in more of a bullish territory, that's a sign that a lot of people are in the negative and haven't been doing well in the project. Therefore, you have more of an opportunity because all of these projects, given enough time, are a zero-sum game where there's a break-even success rate between traders. So obviously, the most important to look at is Bitcoin right now. We'll actually look at the actual raw MVRVs first to give you an idea of how things look. Over the last day, average traders are down about 3%. So if we go over here and look at this bar, that means that historically, it's almost above this green dashed line, meaning it's a very, very good opportunity for a short time scale to jump in. However, you'll notice that the other five, the 7, 30, 90, 6-month, and 1-year divergences are all looking bad, which is causing the average right here to be at about negative 0.79, close to the red dashed line, which shows that it's in a big danger zone. Now, obviously not quite in that danger zone, and there could be a little bit more of a bounce here to get the 30, 90, 6-month, 1-year guys really, really far down and push this red bar down below the red dashed line, which is almost a sure sign that the price is going to drop. But we're not there yet, so we can see things go either way. And even if we have a bounce, it doesn't necessarily mean that all of these guys are going to profit, especially if there's a lot of panic selling going on right now. Obviously, the big ones that we've seen the most trader returns over the past week, especially, have been on this model at least, are Maker and Chainlink right now, which are both showing that they're very overbought for everything here. I guess Maker has had a slight decline over the past 1 day, but Chainlink has not. That's why Chainlink, all 6 of its bars are showing that it's in a danger zone right now, and that's why averaged altogether, it's well below this red dashed line. These are ones to be careful with. Obviously, the markets can be irrational, so this is only one metric of many. But given this snapshot, Chainlink and Maker are going to be big risks if you are buying into them right now, and even if you're holding, right? There's probably going to be a price decline at some point to push these danger zones back over the red line at some point. And obviously, with most of these in the red and orange territory, it means the crypto markets in general are a bit riskier than usual. So keep that in mind. We have a few exceptions, obviously, with Raiden not having a great week at all. That's why these divergences are looking like they're in opportunity zones. And obviously with XRP, mainly due to its SEC lawsuit and the amount of controversy going on with it, there has been a lot of FUD, if you will. Arguably, whether it's legitimate FUD or not, that's not our place to say. But regardless, the sentiment over XRP is very negative at the moment because of the lawsuit news, and it's caused the price to drop. Therefore, it's showing as an opportunity, but take that with a grain of salt, depending on whether the FUD is legitimate or not. Okay, next up, I'll show my holders distribution model last, but first we'll look at the NVT for Bitcoin and Ethereum here. We had, I'll make that just a little smaller. We have had mostly really good looking days in January for Bitcoin. Token circulation, which is what this model measures, is going to show the amount of unique tokens moving from address to address. And the higher that level is of unique tokens being moved, the better this model is going to look. The bars being lower are better in this case because it's a ratio taking market cap divided by token circulation. And we want the gap between token circulation and market cap to be smaller. Therefore, these bars are more green the smaller they get compared to these trend lines here. So when they're under the trend lines, good news for Bitcoin. Ever since looks like October, that's when we got into semi-bullish territory. And what do you know? That's when the prices started to skyrocket. And obviously, when we're in pure green territory, like we are in January, that's a very bullish sign with this particular model. And that's why, or at least a contributing factor, token circulation being so high, as to why we were able to get above 40,000 for the first time in Bitcoin's history. Say what you will, this is likely due to whales transacting at the frequency they are, especially when we looked at this chart back here showing that the mid-tier guys are actually not involved as much as they have been in a long time. But when you have this amount of addresses just exploding with 1,000 or more Bitcoin, it's likely going to contribute to the fact that there is such an immense amount of token circulation happening right now. Looking on Ethereum side, it's actually in an even better position. We've been getting constant bullish signals since last May. This is our 9th straight month of green bullishness. And pretty much since then, we've had mostly huge upswings in the price of Ethereum. Other than October here, it's basically up every single month since it got into green territory. So the model is definitely doing its job here. You can see over the last 3 days here, this is today, so it's incomplete, but yesterday, very good sign. We had an extremely good token circulation day for Ethereum, and I think it really popped back up. It was at around 1,000 and popped back up to about 1,200 on the 14th. And then the day before, also a good looking day. The entire week before that, 4 to 10 days ago, which is this black marker, also in a great position. As long as you're seeing these green bars continue to be lower and lower from the previous, it's a pretty sure sign that prices are going to continue to skyrocket, barring Bitcoin isn't doing something weird itself and pulling down the rest of the markets, which right now, Bitcoin itself is looking very good. So Bitcoin, Ethereum, both great, especially Ethereum. We'll look at Chainlink as well, kind of in the same position as Ethereum. Constant green bars ever since February. So we're basically in the 12th straight month of bullishness for Chainlink, and the price hasn't disappointed for those who have been following this model. Obviously, a little bit of volatility in September and October, as most altcoins had, followed by great performance, which is getting it close to its all-time high of 1985. I actually think it got a little bit over that, but at least the closing price in August was 1985 for that highest date. So right now, we're looking like we could reach that all-time high once again if things continue the way they are and Bitcoin doesn't drop off. Chainlink is looking great. It's obviously having a great 24 hours right now, and we'll look into it more here after I go over the last model. But yeah, the big three that we see the most discussion on outside of maybe XRP, which I won't get into today, the big three are all looking bullish right now, and that's great to see. Until that changes, I don't see a big correction taking place. All right, now for the big one that I really want to analyze with you guys a little bit. This is our new holders distribution chart, and we have another look that I'll show in a second. But what this model is doing after it, of course, does a refresh, it always likes to do that right after I open it. Here we go. It's showing the amount of whale addresses, depending on the price of the asset. In some cases, that's going to be holders of 10,000 or more tokens, as we see here for SUSHI. For Bitcoin here in blue, that's going to be 1,000 or more. It varies from token to token, but this is essentially showing the amount of whales that are growing or dropping compared to its previous 3-month average. When it's moving up like this, that means more and more whales are getting into the asset. And when it's down below this 0 marker, that means there are less whales now than there have been, taking the average of the amount of whale addresses over the past 3 months. So obviously SUSHI looks to be the winner right now. It's having more 10,000 plus holders now than it has ever in its very short history. I can actually go to the data section, and I'm going to look up SUSHI really quick so we can see the raw numbers. In fact, no, I'll do it the Sandbase way. I'm actually going to open SUSHI here. And yeah, just as confirmed on the model, this tan line is showing the 100,000. I'll change that to 10,000. What's the price here? No, I'll keep it at 100,000 actually. I liked what it was at. 100,000, confirm. So the tan line is 100,000 or above. There are a total of 48 of them. So it's kind of a small sample. I actually will show what it looks like with the 10,000 group included, just to give a little more of a sample size. And either way, we're basically at the highest point among these top addresses that we've seen since SUSHI existed at 214 now. After being at 161 just a little over 2 weeks ago, that's a huge, huge upswing. And as you can see, the price really tends to follow that closely, which is why I love holders distribution so much. You can isolate the amount of those top tier addresses that actually exist at a given point, and it gives a really good way of analyzing whale behavior by really just showing the amount of whales that are getting in or out of an asset at any given time. So we already went over how Bitcoin and Ethereum are continuing to stay very high with their own respective whales, but they aren't going up at the rate of something like SUSHI, which is really just continuing to explode. If you go back to November, 2 months ago, we're almost double the amount of 10,000 plus addresses. And that's the reason that on this chart here, it's the leader out of the 30 or so assets that we have data for, that are of note. At least we have hundreds more actually, but we can only fit so many before this line chart just looks like a blob and we can't get anything notable from it. But yeah, SUSHI up there. Keep is up there, though keep in mind that Keep is a very small asset that has a lot of skewness to its data right now. This is, oh, that one actually isn't labeled. I'll have to look up which one that is later. But Sentivate looks good. Matic is getting some gains right now. This one is Wi-Fi, which is seeing a nice steady upswing over the past, basically since the beginning of the year. And then conversely, we're seeing Bancor down a bit, OMG down a bit, Raiden, XRP, which isn't surprising at all, Kyber, ELF. These are all under average right now. Now I can show this on a better view, and this is the one I've been working on a lot over the past week. This is showing the amount of this big fat purple line is showing the 90-day holders percentage change. So that's the same as these lines here. The yellow, which is kind of hard to see, this is a good one because SUSHI is actually up a lot just in the last day. That's the 1-day change. And then these little bars are the actual price changes. So if you're looking for something that's a really good opportunity on this model, you'll want to see something with a small price change over the last 1 day, or at least in the last 90 days. This is the average. So over the last 90 days, the average price change for these 30 assets is a pretty staggering plus 91%. But a lot of those are well under, like 0x, for example, only plus 37 over the last 90 days. And then it's actually down in terms of whales. So that means that it's justified. But how about if we look at Aave? Actually, no, Aave is not a good example because we're still getting in more price data. It needs a little more time to hit that 90-day mark. Better example would be, here we go, not Bancor. Yeah, actually, nope, SUSHI is actually well above in price right now. Band, okay, Band is a perfect example because over the last 90 days, the whales are up about 27% in terms of addresses of whales compared to the 3-month average. And even on the 1-day scale, there is 8.5% more whales than there are over the previous day. So there was a huge upswing in these amount of addresses just in the last 24 hours. And the price over the last 90 days is still well below the average for this huge group of altcoins. So it looks like a good opportunity there. And I know that it's actually seeing a pretty high amount or a high price upswing right now that's kind of showing why whales are such an important factor. This gold line in this case are the 1,000 plus addresses. I want to make that a little higher because Band is a smaller asset, so we'll just go 10,000 plus. So these are the 10,000 plus addresses. We were at 60 back on December 18th. Now we're at 76. That's a very large percent gain just in the last couple weeks, about 3 weeks or so. And then if we look at price, we give it a hard refresh just to get the most accurate price possible. We'll look at just the last week. We'll actually need to go to band again. And price between yesterday, today, I need to get off holder distribution. One sec, guys. Do it this way. So price is looking like it's above $10. It hasn't really been above $10 since about a week ago, give or take. But it's rebounded nicely because of the fact that whale numbers are continuing to grow. That's the moral of the story. And you can also, of course, see that volume is really on the rise as well, showing that traders are interested in this price climb, right? So going back to holders distribution, that's really what you want to look for. You want to look for the assets that aren't really meeting, they aren't above the average for the last 90 days of price performance, and they're seeing a growing amount of 3-month holders percent change on the 90-day scale and the 1-day scale. So this would be basically a home run. Now, arguably, the price is already starting to bake in because we've seen a very recent uptick. If I zoom in here, this was as of just a few hours ago. We were at 893 and exploded to 1051. So a lot of this may have already come to fruition, but obviously we had a retracement just recently. And as long as these numbers stay high, I would expect for those prices to be revisited because of the fact that whales are going to be able to control the markets and do as they please, as is the case in crypto for basically any asset, even Bitcoin and Ethereum. You can see Bitcoin over here on the very far right that confirms exactly what we looked at to start the call. About 7% gained in the last 90 days in terms of whales and the amount of addresses. Over just the last day, it's about even at about negative 0.09%. So if we went back to, I won't even show it now, but as you guys remember, there was just a very small retracement of 2 whale addresses between yesterday and today, and that's showing why we're at negative 0.09%. Obviously, the 90-day price change really is unbelievable for Bitcoin, and it's one of the leaders in terms of the top 100 assets because, as we all know, Bitcoin dominance has been the name of the game for about a month and a half now. So that's our holders distribution model. I really like it. You guys can get your access to it with your Sandbase Pro API key. We recently added it to the list of templates that are available. You'll just want to plug in your API, go to add-ons, Sandsheets, API key, add yours in. You'll be able to see it and then download your own copy from there. All the instructions are on the website. It's very easy to get everything set up. But of course, ping us if you have questions in the Discord server or DM me directly, and I'll be happy to guide you through how to get everything up and running. So with about 10 minutes left, we're going to check out our questions, see if there's anything there. Gary and Balresh, if you have seen anything, just let me know and I will address them.
Yeah, Brian. So do you have an opinion on algorithmic stable coins as a class?
Algorithmic stablecoins. Gary, do you have specific algorithmic stablecoins that you think would be interesting? Because my understanding of them are fairly limited, and I don't want to make assumptions about what the most notable ones are.
Well, Sandbase have at least 20 of them, and one of the most hyped ones lately are Mithril Cash, yeah, empty set dollar, ESD, yeah.
ESD, you said?
ESD, yes, this is one of the examples. The main thing with these tokens is elastic supply. Its supply is like floating. It's extracting and moving in other side when to address the demand, market demand. So it's a complex thing.
Okay. I can look at least at things like social volume and volume for it to see what's been interesting, but I'm not going to pretend that I'm a big expert on these guys. I know they're fairly new, and I don't want to give information on a subject that I'm not fully up to date on myself. If Dino was here, he may have more of an input than I do, but we do see that volume for ESD kind of peaked right around the end of the year, and ever since has sort of dropped off. So that's something to take note of. Social volume has been pretty scarce, so there isn't a lot of interest in them right now. This is, of course, only one of many. What was another ticker that you said?
DSD.
DSD. Okay, so it looks like just about the same trend. It looks like a lot of these had the largest volume right at the end of the year, the end of 2020, and has kind of declined ever since. Again, social volume is pretty scarce here. I may even check out development activity and see if there's anything of note there. So on the stablecoin side, it does look like development activity of DSD is picking up. Let's look on the Ethereum side. Yeah, so about the same. It looks like development activity for DSD at least is really picking up. It's returning to right where it started back about 3 to 4 weeks ago. So that's something to keep in mind. I don't think we have enough information, to be honest, about these types of stablecoins. And I think we should probably stick to regular cryptocurrency assets, guys, if that's something we can try to do. I do see the last one is BAC, so I'll really quickly go over that one as well. Basis Cash. So volume, it looks like Basis Cash had a very large upswing on January 9th, and the price looks to kind of work pretty independently from volume. As far as social volume, it's pretty scarce still, not really much notable there. I don't think on-chain metrics really tell the best story, especially for such new assets. So we're going to leave it at that. I'm just not going to say much more about them. Any other assets that are popping up, people have questions on?
Looks like not yet.
No problem. I will show a few other ones of note right now. I know that Ren has had a really big 24 hours itself. Actually, over the past couple hours since it corrected, things have kind of returned to normal. But I will, let's see, I'll really quickly just load another template so I can get back to the main look. So Ren's price, as we see here over the last 2 to 3 days, has really exploded. You can isolate that and see that it really hit its local top here just about 8 or 9 hours ago. It got up to about 54 cents. If we zoom out, that's the highest price it's seen, at least in the last 3 months. Just about, yeah, since September or so, give or take 4.5 months. Or 3.5 months, I should say. No, I got it right, 4.5 months. So we're getting a really nice rebound for it. If we look at volume, we're starting to get an uptick, but it's not quite where we want to see a sustained rally, and we're already starting to see that correction. So volume is really going to heavily dictate whether this rally can continue and get up to where we saw at the 57-cent mark back in early September. We can also look at how development activity is looking for it, and it's staying pretty low. So that's a little bit concerning to me. I want to zoom out really quick here. I'll actually just look at all time. Nah, too much. Last year, we saw that it peaked right after the local top. So I'll be interested to see if it really starts to grow here again, to justify that price can get back to its all-time high. But development activity isn't really notable yet. If we look at daily active addresses, it is starting to grow. I still like the long-term trend here. We really dipped right around Christmas, but it looks like recovery is starting to show. If we go to just the last 6 months here, we'll see that it's kind of in a bit of a indecisive area right now. I'd like to see a day in the next week or so that's at least above this line to show that it's in an uptrend. If it isn't, that would mean that there's kind of a bearish divergence forming, and price is going to be dropping back down. So I want to know that the daily active address trend is going to get back up to where we saw back in August when we really had our peak here. If that's not the case, then like I said, it's going to be concerning and a bit suspicious if prices are climbing without the amount of unique addresses doing the same. I'll also look at its holder distribution, which I believe is on a bit of a downtrend. It's not one of the leaders when I looked at my holders distribution model. And if we are to just isolate the top 3 tiers here or so, top 4, we'll say, yeah, it looks like, you know, the 10,000 to 100,000 category, kind of a downswing. It has risen up just over the past 5 days, but the 100,000 to 1 million group is looking down. This one, which is very hard to see, but there's a dark line here showing that the 10 million to infinity is actually up, and that probably had a lot to do with why this rise happened. It was at about 9 for a while, but as of it looks like last week, it got up to 12. So there were 3 new big addresses, or a 33% gain of these 10 million plus addresses, and it's now retraced back to 11. I wish I could color so it would be more apparent. It may not even be showing up for you guys, but yeah, there's the 10 million plus tier looks to be growing, and that is keeping Ren looking as a bit of an opportunity, but the ones right below it are all retracing, and we'd like to see those start to pop up a little more to really give a signal that the price is going to explode. So I just wanted to give a recap on Ren. Thank you for the questions about elastic stablecoins. I'm sorry I don't have more information about it, but as a team, I think we'll probably look to add some metrics there over the next months so that you know, these new heavy interest type of assets are getting more attention, and there's more useful information for you guys. That being said, we're at about an hour now, and I'm going to go ahead and say that we will see you all next week. I wish you all a wonderful weekend. It's definitely a very volatile time right now. So keep in mind that these types of metrics that we looked at today, the holders distribution, daily active addresses, social volume, plenty of others that we didn't even touch on, they're all going to be tremendously useful in order to identify in kind of a mixed week or so which ones are going to begin to separate themselves from the pack, like we saw with a few. So definitely check out Sandbase Pro if you haven't. The $45 a month is going to be more than worth it. It pays for itself quickly, I promise. We'll have some